Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, January 3rd, and it is officially the first day of the US trading session for 2023. So, getting a lot of good data in for how the beginning of the year, month of January, may play out. We've got DXY, the US dollar index, loaded up on the screen right now. As if you've been following our daily videos for much of 2022 and 21, we often track the US dollar index, and basically quick catch up from beginning of December is we've been sitting in pretty much the same exact range for more than a month. And that is not entirely a good sign for risk. As you can see, just moving quickly to equities, very compressed range, not in the grand scheme of things compared to higher price action. We've only moved 9% since then in total, and we've been compressed to a 3% range in equities, and even smaller for crypto in that time frame. So DXY sitting here, as I've said before, definitely signals that volatility is coming, but that volatility will come when we either break support or break resistance. And right now, we're of course sitting in the dead center of the trading range. Many expect the DXY to falter and drop. We definitely warned that that was possible. We said we needed a confirmed break below 103.4, and of course that's where we caught, and we've had a pretty large daily candle today, and technically, this RSI system that I was using is still in operation, with RSI now lifting above RSI resistance of 42, which it has had a resistance since the 21st of November. So we typically use an RSI break in either resistance or support or the trend as a early indication of potential price movement. So if RSI breaks higher, typically price will do the same on a delayed effect, but of course nothing is 100% in trading. So the fact that RSI is broken above a key level, and we are still working towards bullish divergence with flat price, higher RSI. So we've got a lot of signs that are starting to stack up again, saying DXY should move bullish. And if you've been following our reports for quite some time, you'd know that if the DXY increases, risk will decrease. And if DXY decreases, risk will increase. And that is because if the dollar is going higher, you can buy less risk assets with a stronger dollar. And if the dollar moves lower, you can buy more risk assets with a weaker dollar. So that's basically how we're looking at it. And once this range breaks higher or lower, we should see a lot of volatility come into play. Right now, of course, it does look like it wants to break higher, but we have no confirmation yet. So we'll still continue to track this day in and day out. But 105.3.4 is resistance for DXY. And of course, 103.4.5 is support for the dollar. Moving on to equities, a little bit of an unsexy chart given all of our support resistance levels in tight range. But just as we described, we've been in a pretty tight range since mid-December, about December 15th. We've been wholly unable to break above 38.75 with any sort of strength. We had swing failure pattern here. We had swing failure pattern yesterday after equities open and into this morning. We're of course catching at where we found support multiple times throughout the December trading session, and that is 3,800. So 3,800 will continue to act as support, and 38.75 will continue to act as resistance. And I have a funny feeling that you won't see a break above 3,900 or a break below 37.70 until you get a breakout of DXY in either direction. So I have a feeling we'll be pretty much condensed to this range as long as DXY is condensed to its range, unless it just continues to sit in the same price for perpetuity, and then eventually you'll see a breakout. But I have a feeling that, considering we've been waiting on DXY for a month, equities and crypto have been more or less sitting, in a very tight range for half a month to a full month. That's pretty much my indication, more or less. So if 3,800 breaks, we're probably coming down to 37.70. I'll go ahead and draw my lines. And then, of course, we have another level down here at 37.20 in case that level breaks. And, based on how we've been trading is, very range bound. If I was a betting man, I would long this level pretty much at least probably to either the POC or the previous daily close. And then depending on how reaction comes in towards the end of the day, potentially we flip that level and head back up to the top of the range by, maybe tomorrow or into Thursday. Of course, this level breaks, I would highly expect this level to catch, provided DXY is still within the range. But we are extremely range bound, and if you've been shorting resistance and longing support, you've been having a pretty good trading session, even if you've missed a day's worth by longing a little bit early last Wednesday and then closing it into Thursday. So I'm not saying take unnecessary risks, just saying we've been extremely range bound, and I would expect that to be respected, provided DXY is still sitting in its range. So looking at Bitcoin, knowing what we know about equities, very similar outlook, very close range, very similar to equities. Since the 16th of December, we've been stuck in this larger range, very tight trading. Peak to trough is, a whopping 3.8%, and typical daily trading has been a max of, 1.5% or less. So what we discussed yesterday is the need for Bitcoin to break above 16.8 to then move higher. It obviously did not, was rejected multiple times after we spoke yesterday at the 16.8 level. We've now moved back down to the center of the lower half of the range, and we are catching at the 16.6 level, more or less. Of course, if we falter here, then 16.55 is the level where we both have a POC here and a lot of trading supports. Also slightly lower down to 16.5, so you could potentially see something like that. And of course, if 16.5 breaks, then you have 16.3, which is the lower end of the range, which we also touched in the 19th of December. And of course, the high end of the range, if you can flip above 16.8, is 16.9, which you would then have to flip to get up to 17.1. Just because we dipped today doesn't mean that the bullish bias is gone. But of course, we know what we know about DXY. We're watching how equities are reacting. They're back to the lower end of the range. And I'm not expecting Bitcoin to really move entirely too independently from equities and the rest of risk, just because, crypto is not as sexy of a risk category if you're going to be making long-term buys as a seasoned investor. Now, of course, we do favor crypto over traditional equities, but we have to be able to look in the mirror and say when is a good time to enter the market based on the macro situation, based on the effects of the dollar, based on bonds, based on treasuries, et cetera, et cetera. So right now, what I would expect is likely dripping back towards at least the low end of the range, very much mirroring equities. We could, of course, hold this level and try to pipe back to 16.8, which is very plausible. It's very difficult to trade when you're in the lower end of the range. So I think a better trade would be to long 16,550, long 16,500. And then, if the opportunity presents itself to potentially short, either 16.9, 16.8 or all the way up to 16.9 if we get to the top of resistance. So yesterday was a good short opportunity after those multiple rejections. Short came. Now we either wait for continuation into demand lower or demand higher. So for Ethereum, very, very similar to Bitcoin, of course, moving a little bit more volatile. So better opportunities for trading, but very, technically driven, as we've been discussing. Yesterday when we talked, 1220 was kind of that limit, very similar to Bitcoin, could not get above 1220, dropped lower. Expectations based on equities would be probably a drip down to 1200, very similar to Bitcoin. If 1200 broke, then we'd probably be down around 1190 for a potential swing failure pattern. We do have 1170 lower, and we of course have 1150 lower, but I would not expect those to be tapped unless DXY really zooms through 105 unexpectedly. So if this level, we do have the 200 MA, 100 MA sitting right here at 1208. 1208 can hold, get back to the previous daily close, get back up to that 1220 level, and then you can potentially bring pardon me, bring some momentum to 1230. And then, very similar to Bitcoin, good long area at 1200, good long area at 1190, good short area at 1230, provided DXY is still sitting inside of its range. Like we mentioned yesterday, probably the biggest metric will be this week will be unemployment rate. We have CPI next week, so next Thursday. So this Friday unemployment rate will kind of be a lead up into CPI. Of course, different metrics, but the Fed, their mandates are CPI and unemployment. So we're getting, 2 data points within 6 days of each other that are more or less critical to the next FOMC meeting. So I have a feeling that the markets will be closely tracking that. And of course, remember, we do have tech earnings at the end of this month. So, should be a very interesting month for volatility. I think it's very, I don't want to call this easy, but the sign should be ahead of you. Unless, the market is receiving bad news, the bias should be a bit higher in terms of price action, because there's a lack of impact to the market. So people will probably start to buy long a little bit, and then once that impact comes, meaning bad unemployment rate, bad CPI, FOMC rate hike, these are the things that are going to suppress us down. And absent crazy volatility from the dollar, or potentially bonds and treasuries, then we should continue to either sit in a holding pattern, very much like we have since mid-December, which is a very tight range, 3-4%, maybe lower, and then or potentially a slight drift higher, depending on how large that data gap is. So there's something to look out for as you're trading into the year. Of course, what I'm saying right now might not be 100% true. The market will act as it does, but typically we've seen news be bad and push us down, and a lack of news be good, and we either range or end up drifting higher. And of course, we are in the beginning of the year, so new fund positioning. Of course, that fund positioning could be originally short, expecting potentially bad end of January. But of course, the best way to track these things, like we've said, is level by level. At this point in the market, we're down 70, 80, 90% across some assets, and the best decision to make is play it level by level. Take your money off the table, put a little bit of money on the table when you recognize a good trade. Else, just watch the systems and play it when you have a good opportunity. And right now, we've been shown that resistance and support are good short and long opportunities, respectively. And due to the dollar ranging, and right now, it's best to just play it level by level until you see a breakout in either direction that is confirmed. Don't try and trade a breakout just because you see a candle poking higher. Wait for a retest. Wait for a rise higher, because if you were longing breakouts all month, you would have been cut there. You possibly would have been cut here. You definitely would have been cut yesterday. So definitely things to keep an eye on moving forward. We have this massive block of liquidity in this range. We do know when we move outside of value, typically we move back inside of value. And like I said, I'm a broken record at this point. I'm very much waiting on DXY to make a decision soon. It's shocking to see this so suppressed and not have a spike higher at some point. Could also spike lower immediately and then spike higher. Talk about that breakout fake out that we just mentioned. Just because you have a candle close lower, you need a confirmation candle to also close lower, or else you are potentially trading into a trap. So good luck, happy trading. We'll see everybody tomorrow. And by the way, if you haven't if you're not signed up for the TTC newsletter, put out a newsletter yesterday with some predictions for 2023. We mentioned some coins that we believe are, will outperform or have better trading opportunities compared to top cryptos. And 3 of those 4 are actually in the most bullish coins today. And 3 of the 4 actually outperformed Bitcoin and Ethereum this morning, even when Bitcoin and Ethereum were down. So we threw in a couple freebies at you for all of our subscribers. If you're not a member of the Trade the Chain community, you can still get on the newsletter at tradethechain.com. I believe tradethechain.com/newsletter. And definitely keep up with our stuff that way. And of course, join the community for all the acute specific information where we update, morning, afternoon, and night in regard to the markets, outlook, trade ideas, etc. So good luck, happy trading, and shout out PA Fiore. I hope I pronounced that correctly. You're very welcome. We're happy to do this every day for all of you guys. So have a good one. Good luck trading. See everybody tomorrow.